Bitcoin's on the move again, but not in a way that we're used to. It's been a, good 1 to 2 weeks of seeing the markets do pretty much mostly sell off, recover, but then as soon as it does recover, starts to sell off again. So it's got everyone potentially wondering, maybe yourself, is it all over? My humble opinion, no. But that's kind of what I'm here to discuss today, really. Why I'm still bullish in the face of all this selling that we're seeing currently in the markets, both fundamentally and looking at things technically as always. Hi guys, my name's Pav, lead market analyst at Swyftx, and yeah, pretty keen to break through maybe some of the sort of fog around the markets at the moment. We started a new quarter, started a new month. Just a reminder, all this information, it's all just my opinion. So at the end of the day, not to be used to make any investment sort of actions for yourself, but hopefully just to act as another source of information for you to sort of make an informed decision on your plans and what you are expecting to get out of crypto in the coming months, coming years, etc., etc. But look, I think we just dig straight into it. I think what I'm going to cover today is essentially both bullish and bearish cases for Bitcoin here either way, but honestly just also dive into some of the more fundamental sort of tailwinds that I think are blowing in favor of Bitcoin and other crypto assets at the moment, and what it sort of would look like for that to start to play out, take place, all that jazz. Got the Bitcoin halving obviously as well coming up as well, so just something to keep an eye on yourself. Not really too much I'm going to call out today about that one, to be honest, but yeah, just to have it on the radar. I mean, we have seen historically jitters leading up to the Bitcoin halving, which maybe some people are sort of attributing some of the sell-off just being that, an expectation that there has to be some kind of sell-off. But more so than that, I'm going to dive into some seasonality data, which a lot of people may not be aware of, but there's actually some sort of ebb and flow to the way the markets move, especially in election cycle years. It's actually a pretty interesting data point, so I'll dive into that as well. Got an interesting take on Solana versus Ethereum as well, which may or may not be controversial and unpopular, but hey, look, we'll just talk about it the way it is. And yeah, let's just get stuck in. So obviously been a couple of interesting days like we talked about. We've had fear and greed sort of reset from these high 90s, which has been there for a couple of days in recent times. But all in all, you know, sitting here tonight on the 3rd of the 4th, everything's kind of looking like it is somewhat stabilizing. You know, we look at a chart like Bitcoin, you know, I did mention, you know, within the 14th of March, like about two-ish weeks ago, we did see a pretty substantial sell-off, 17%. So that's by no means something small. They're the kind of sell-offs that we have seen in the past before there's been major reversals and exhaustions in that selling pressure. So yeah, the most notable one, I guess, was at the start of the year. That was a 21 and a bit of change percent sell-off. So, you know, in terms of magnitude of the sell-off that we have seen in recent time, it's been pretty decent. You know, and it's been after the ETF as well, where we have had this remarkable amount of buying power sort of sustained in the market for so long that really just has everyone guessing as to, you know, how different is this cycle going to be, right? But even most notably, like this is obviously the top to tail move that we have seen in the last couple of days. Yeah, 10.2% there as well. So whether or not this is finished going down or not, don't know. I think anyone out there right now that's trying to predict where this one is going to turn around and go up or down is just guessing like anyone else, to be honest. But, you know, if we look at sort of simple data points like something like funding rates, so a lot of people sort of pointing to that maybe there's too much leverage in the system. You know, a way you can visualize that is on this website called CoinGlass. You can check it out yourself for free. With a very simple thing called a funding rate heat map. So no fancy numbers here. It's just all colors, very, very basic. And just think of it like a traffic light system, right? So we've got data on the bottom, a whole bunch of assets here across horizontally. And even if you just track something like Bitcoin, you can see during these periods where we are flashing more of a warmer color, they are the periods where the interest rates are higher. So effectively, there's more leverage positions open than what would normally be in the market, I guess, during a high open interest period of time, like we're seeing here during the middle of March. And during the middle of March, you know, that is that same sort of period where we had that washout as well. So it's quite normal to see elevated funding rates during a bull market, but what it requires is a sustained, sort of action on spot buying, which is something we've seen from the ETF in particular provide us to mean that those elevated funding rates don't get wiped out. You need spot prices to follow what the futures markets are doing, very simply put. And what we did see is, I'll talk about this in a second, but what we did see is essentially these funding rates start to rise, and obviously there was no follow through from the spot market. So we had a futures market that was pricing in potentially higher rates, like at a premium, that essentially was just flushed out, reset at the end of the day. And I mean, I think a good sign of the times and I guess sentiment check right now, as you can see, Pepe here had the highest funding rate during this most recent washout. So there's just lots of people just FOMOing, just blindly potentially longing meme coins because they have been running so hot. I'm not saying that's what was happening, but it's a pretty reasonable thesis that obviously WIF and Pepe, maybe catching a bit of more of a retail interest, potentially coming back into the market. So seeing those two at the highest sort of heat prints, showing that they were very much more skewed to long than shorts in the market for those particular assets. These things you got to expect. And I mean, if we look at something like liquidation events as well, I think if I can get this up in time, that's the couple of peaks that we have seen here. They sort of represent longs and shorts washed out of the market, the green being the longs. It's been predominantly longs that are being wiped out in these moves, but we are seeing less and less liquidation events or magnitude of liquidation events on the long side. So again, like we talk about a trend reversing, one of the themes that we probably want to see is something along the lines of a, less and less of a certain direction of the market being wiped out. And obviously, if that's happening, there's probably more orders building on the other side. And a way I can actually show that is this other tool I got on CoinGlass. It's a liquidation heat map. So these are all approximations, but again, all about heat maps here. We're looking at a monthly sort of timeline along the x-axis there, and the sort of concentration of liquidity is sitting above price at the moment. So very simply put, if price is drawn to pockets of liquidity, which they often are, we could potentially expect that this region is at some point in the future going to get taken out. So whether or not we go down a little bit further first before we go higher, it definitely sets up, this is setting up as an area to be a catalyst when price does reach it. We could see prices move quite quickly. And that's not something rare. So like you can sort of see in this area, we had a bunch of orders built up as soon as we moved into it, had a very, very explosive move. And the same goes for the other direction as well. So we had a whole cluster of liquidity building here. Boom. Once you touch it, it's just like a spark to the fuel and it just goes. So it's just a whole bunch of trades taking place at once with a market sort of buy-sell nature. So you do tend to see just that rapid shift in price. So I wouldn't be surprised if once we do start to see new highs above these local highs of 71K, just from a market dynamic point of view, looking at the way it is as a snapshot today. Once we do hit this, I wouldn't be surprised if it just teleports closer to 80K than people might be expecting. And I think a lot of this, again, like I've mentioned, it comes down to spot buying continuing or sort of ramping up. This is a good chart just to show that we have seen a slowing down, leading into the end of month, leading into the long weekend, where we did see outflows after that big mid-month sell-off in March, and we just haven't really seen notable volumes really return just to start off this month already. But we are seeing persistent buying from the products of BlackRock, Fidelity. So, I mean, read into that what you will, but it sort of seems like that might be their floor level of purchasing at the moment. And then when they start to see more conviction and bias in the market, they might step up and do some bigger days like we have seen in the past. And another thing to sort of keep in the back of your mind is Morgan Stanley, one of the big four banks over in the States, looking to add spot Bitcoin ETF products to their brokerage platform. So tapping into a whole another sort of realm of liquidity entering the market as well. Again, just sort of tells me that, while Bitcoin is down now, the narrative and theme around ETF buying might just get even more explosive in the coming weeks and coming days if this is confirmed. So that's kind of my sort of thoughts on just the general sort of dynamics of the market at the moment. I want to talk just lastly about seasonality in the market space as well. So this is a composite chart of the NASDAQ over, I think it's the last 20-year averages. Yep, that's right. So what this chart is basically showing is the average returns of the NASDAQ, which is a tech stock essentially, well, mainly tech stocks, trading the top 100 there. And it goes to show that, if we look at the last 20 years, generally speaking, the start of the year can be a bit slow, but moving into April generally tends to be a good month historically speaking, where May we do see a sudden sort of correction and sell-off. So you're looking into the next 2 months, that's a potential narrative that could play out. And that's, looking at something like the halving, we have seen in the past when the halving does take place, the month after there can be a correction. So this sort of feeds into that narrative. If we are going to see a sell-off, it might be post-halving, or a significant sell-off, I should say, if it happens. We don't know, right? And then it sort of just goes on to show that the rest of the year is relatively moving towards the upper right-hand corner in terms of relative gains. And another one I can show is the Dow Jones Index. Again, another indexed chart of the top 30 assets on that index, sorry. And this is broken down by election year seasonality. So election years, 4-year cycle, read into that what you will. But again, we can look at this is a 73-year average. The current year that we're in is the election year. So I would just look at last year's, for example. Like, we really did follow this sort of to a T. October was when we did see that first big move to start to break new highs. So let's look at Bitcoin, for example. Jump on a weekly. This here was the memorable September and October that everyone probably came back to the markets in, to be honest, because that's when we started to make some pretty big weekly moves, apart from this sort of chop and chisel over here. So again, like, that's pretty much the reaction that we did see in the Dow Jones, looking here during October, November, December. And then moving into this year, historically, we have seen as an average a grind up in January, February, March, and then April tends to be a bit of a bigger move. In election years specifically, it has shown that March can tend to be a bit of a hot month where we do decline, but it does recover into April as well. And again, the same way our NASDAQ composite chart here showed, May was a sort of month where there was persistently selling. Same sort of trend is seen in an election year as well. So for me, the sort of stars fundamentally are aligning that, while everyone's looking at prices right now thinking could go lower, maybe May is the month to look at, right? So fundamentally and seasonally speaking, that's some things to take into account. Now, if we look at Bitcoin and we start to map things out technically, I guess what I'm currently seeing here is that we are still in a range. Ooh, where's my range? Here it is. We are still in a bit of a range until proven otherwise that we are respecting. And I mean, for me, it really just comes down to anything is still possible. I'm not going to be completely convinced until we start to see a little bit more structure from the markets, specifically higher relative highs to this one here. But the tailwinds are behind it from a macro perspective, that things are starting to look a bit more positive. And even the Fed meeting that did happen last week, 2 weeks ago, I think it was. Jeez, haven't done a video for 2 weeks and I start to forget things. Even Jerome Powell, US Fed Treasury, sort of came out, did the press conference and was talking about rate reductions are most likely to sort of come middle of this year. And, unless the data changes in a significant way, that's what the market should expect, right? So, and to be, I guess, pretty clear as well, this big sell-off that we did see was leading up to that big meeting as well regarding US interest rates. And the very simple takeaway there is, like, lower interest rates means cheaper cash. Cheaper cash means more liquidity, likely sort of moving away from safer vehicles like money markets into on-risk assets. So just the sentiment towards on-risk assets might improve. But I guess for me here in Bitcoin, I mean, the thing I'm most concerned about is the daily close right now from where I am today, where we are today, sorry. We really want to make sure that we don't lose probably this key low here, which was the last low before the market broke higher on a daily time frame at least. So very, very large range, which is always ugly at the best of times. But even just looking at this potential order block here, we are staying in the upper half of the price area. So that's what I would consider like the premium area. So the market is happier to pay more of a premium than discount. And the discount zone was bought up as well. So the discount premium is more just a way to sort of view a range, and it's basically just looking at the top half and bottom half. It's not very complicated, but yeah, again, like if we do start to see a break below these lows here, that would be enough for me to get very concerned. So if we were to start to see just price start to roll over again, form some sort of shape like this, you know, it's not unreasonable to think that we could get a retracement further. And if we look at things structurally, something around this sort of region, the 50s, high to mid to low 50s, I should say, which is simply just where this breakout started. We could easily come back and retest these prior highs as well. But if we zoom out on a higher time frame, I mean, some of the things that sort of, again, for me is more bullish than bearish is the fact that we have put in a bullish engulfing candle for the month. So quite simply put, for the whole month of March, market participants were happier to pay a higher price than what they did in February. That's basically all that's saying. And also looking at a more macro perspective as well, if we look at the previous all-time high, which on this chart, which is Coinbase, 69,000, the market participants in March were also happy to pay more than what they were paying for the last cycle's high. So again, sentiment is just in that sort of statement as well. And then if we look at the weekly structure as well, that is suggesting to me at least that in this particular candle where we did take out an all-time high, which was here, didn't close above. The market then went to sweep those lows and still continue higher, leading into that final week of March. So again, for me, I'm almost simply just viewing this even away from lower time frames as a weekly sort of range trade almost, where I'm taking last week's week, looking at that on a, let's say, 12-hourly chart, and yeah, like any range sort of base trade, it's all about, you know, one side of the range gets taken. You then wait for it to move to the midpoint, see what it does at the midpoint, and then expect it to go to the other side of the range. And then from there, we might see it move down or move up. We don't know till it happens. So even like looking at it from that perspective on a weekly candle sort of point of view, it still sort of tells me that the show ain't over just yet. But at any sort of given point, it could easily start to fail, and something happens that the market's not expecting, and we start to have a move lower. So that's that as well. And the other thing I want to finish up with that I didn't quite prepare, but I do think is important. We did have a particular data point come out yesterday, the 2nd of April. ISM manufacturing PMI. So you might have heard me mention something like this in previous episodes, but essentially a survey of, in this case, manufacturing. There's usually manufacturing and services. The manufacturing industry, a survey of 300 purchase managers, basically to ask them of their relative sort of business conditions in the current economy. So a lot of people sort of look at things like CPI and talk about how it's so lagging. It's not really indicative of what's happening in the underlying market. These surveys are basically as close as you get to a real-time heartbeat of how things are performing in the economy throughout the manufacturing and services industries. And the key thing here is, again, it is just a data point you have to take with a grain of salt. It's crossed 50. 50 essentially indicates for this particular index that there's growth in the economy, and under 50 is that there has been a contraction. So essentially what you'd want to see in any given circumstance is if we do fall above 50, it does slowly curl back up and moves back to the upside. So, you know, COVID was a great example of that, where we were sort of teetering above, went under, came back above, and now for the first time, we've been sort of in this sort of declining, sort of contracting economy sort of performance for manufacturing for quite some time now, and it's for the first time since November 2022 put in a print above 50. So again, we talk about underlying conditions, people feeling confident that the economy is doing well, you know, even in this high sort of potential inflation, interest rate environment, or higher than what we're used to. That's showing that there's growth. That's positive. That's probably going to mean that there's going to be a good GDP data reading in the coming end of this month. I think it's coming. So again, that all sort of ties into the Fed being comfortable with the data to then pass on interest rate drops, right? It all sort of ties into one another, at least the way that I view it. So that's pretty interesting too. But yeah, look, takeaway here from Bitcoin for me is like this week is definitely an interesting week. There's still a little bit more to sort of be desired to see on the charts. But even what I'm seeing right now, at the time of recording on a 4-hour chart, Kind of wish I recorded this tomorrow. Probably could have more things to say. But, you know, if we do start to reclaim even this weekly channel for me, things will be looking quite good. But I probably want to see prices move here before I start to make any sort of big crucial decisions, to be honest, or at the top of this range here. And as I mentioned, looking back at that liquidation sort of region, there was that big cluster above, close to the all-time highs. So once we get up here, I wouldn't be surprised if we see some pretty explosive moves that people might not be expecting and be left sidelined again. So I just want to point that out as well. Look, I think that's enough for, I guess, my thoughts on Bitcoin, where we are today, where we're going, just the overall underlying conditions in the market right now as I see them. So we can move on to some altcoins. The first one I wanted to sort of point out was Solana. Just the general narrative that people might think Solana's overdone. It's Ethereum's turn. I personally don't care which one goes, to be honest. I'm just in this, like most people, to try and make a little bit of money into more money. But looking at something like Solana versus Ethereum as the denominator, we're still seeing pretty decent strength on a weekly time frame from Solana. So until this starts to reverse and potentially start to peel away, I would still be betting that Ethereum has Solana. This is what happens when I record at the end of the day. Just keep saying the wrong thing. I would still expect Solana to continue to sort of continue this trend until it doesn't. Very, very bluntly put. But there's no reason to sort of say this is starting to look like it's going to reverse. It's at a point where it could. But looking at the weekly closes, just very simply, it's still showing that it's pricing in more strength than Ethereum at this stage. So even looking at a Solana chart now, you know, we are at a pretty interesting point. Again, like the Bitcoin chart, the previous week here has been swept. So for me, you'd want to see accumulation here. So accumulation for me would be to look for new highs since the last low was taken. So yeah, we want to get above this high here, which it's not currently doing. So we'll see what happens in the coming days, like we talked about. But you know, seeing something like this compress and hold, dip. When I say accumulation, it basically just means buying a dip. If we start to see that buy up in that sort of fashion, that's what I think the next leg up could potentially look like. And the alternate of where price is right now is if we can't get over this little hump, this is the kind of areas where you would see prices roll over and you start to see the next level of lows. And the one thing that does concern about some of these altcoins is that there are some key lows that haven't really been tested. So for Solana, this particular one here hasn't really been tested. So I do wonder if there might be another dip lower just to sort of take out some of these potential stops that could be under here as well. So next couple of days will be pretty important, I think, especially if Bitcoin does have just one last little dip before it can go higher. That's something to take into account. One of the assets that got requested by a viewer recently was Ronin. So Ronin, the asset there. So let's have a look at Ronin. Yeah, some of these assets just in very interesting spots where we can't really confirm if it's bullish or bearish, the way I see it at least, just because these last significant lows before a high was formed, which is there. This particular low here has been broken. So not a huge fan of when that happens. That's usually when if you do come higher, you start to see a sell-off, which is what we did see here. But again, if the whole market does turn around, these are the kind of areas where the selling usually potentially could be wrapping up. So again, it's a bit of a coin toss, to be honest. Let's have a look. Just change that to a better color. Apologies about that. That didn't do anything. It's because I did the wrong spot. Here we go. Yeah, I mean, if I was going to sort of look at Ronin for a place to bounce, this might be it. But even from here, I'd want to see new higher highs and then go from there, similar to what I said about Solana. So, for example, that's the last significant high there. So I would want to see price start to track above that. And again, once we start to when we make that new higher high, I then would look for the next higher low, wait for a dip, and then see if the market buys that up and accumulates that. So that would be what I would be looking for on that one. Another way to look at this asset, we could do a bit of trend analysis as well. There's always a few ways to look at a market. It's at a pretty interesting inflection point here as well. So looking at the this low down here, I guess the lowest pivot low there, the next subsequent high, and the next subsequent higher low. For this to be a defined uptrend, whenever the price does throw out of these levels, you want to see it reclaim as well. Pretty common, same as our sort of horizontal ranges that we do time to time again. So this is, again, defining it as an uptrend. Yeah, it's kind of at a decision point. So in terms of invalidating this setup, obviously if we form a new low, it's no longer valid as well, just in terms of looking at it from a structural point of view, but at a very, very interesting point. It could easily go high here, but in terms of seeing confirmation, that's probably what I would be looking at it as. And then if this were to turn around, I mean, there's nothing really stopping it from just doing something like this. Sorry, I'm going to have to delete all of that. I'll quickly do this again. I won't be lazy. We could see even prices start to look to move higher, but as soon as it interacts with maybe like a prior high like this, the market refuses to pay higher premiums, is the way I view it. We see some sort of pullback and then a rejection off this trend line as well, and we start to move lower. And that's when you start to look at previous lows as areas of interest, something like that. So that's like a potential bearish setup on something like Ronin. Just on the relative strength I'm seeing in Solana at the moment, I thought it'd be good to cover off some Solana ecosystem tokens, which have been looking quite appealing to me. Jupiter is one of them. It's been in all-time high territory for some time, and just to see a chart that does something like this, where it's just curling up and constantly being bought up on every retest, it's a thing of beauty, especially if you got this one on an airdrop. Very lucky people among us that got that. But I'm looking at this, again, prior lows acting as support, being as areas of interest that people want to do business and buy in at. We're seeing, again, lows purchased, which we've talked about tonight a few times. So down there. And the next thing we'd want to see is higher highs. So this being our higher high here that we'd want to get over, and this being our key low, we have technically put in a higher high. So now what we're banking on is a higher low to set up that uptrend, right? And this, if it weren't to play out, we would see a lower low and start to break down. So that's what the bullish and bearish scenario looks like from here. Even though it's putting in great structure to get us here so far, if the underlying market starts to fall apart, being Bitcoin, I wouldn't be surprised if this also starts to fall apart too. And then areas of interest for me are these prior lows, and even down here, these prior areas where we broke out from as well. So even when something does look strong like this, there's still the slight chance that you have to keep in the back of your mind that this is what it could look like if it were to go awry. So that's kind of what I'd be looking at here. But otherwise, zooming out to this one on a daily time frame, pretty spectacular looking chart, pretty intact trend until it's not. The fact that we're still putting in solid daily closes above prior highs, that's a very strong trend in the way I view things. BONK, I think this is a bit of a sleeping giant, to be honest. And it's looking a bit interesting, but there's still a little bit more it needs to prove. So another way I tend to measure things up is using Fibonacci. So looking at this as a Fibonacci retracement. This one here. Oh, just disappeared. So taking the top of the range, the last low before we broke higher is how this works. And I'm looking for this golden pocket region, which is between the 618 and the 786, which is there, to act as a area where people start to step in and do business. And by do business, buy. And we might be potentially starting to see that play out right now. So very similar to Jupiter, we have our low here, we have our high. We're starting to see a higher high here. So what you'd want to expect here is a higher low. So we'll jump down to like a lower time frame, draw a trend on this. This is currently the kind of area where you'd want to start to see the buyers step in potentially. And if it doesn't, lower prices are potentially on the cards. Similar to what we have been talking about already tonight. Sorry, I just can't seem to. Yeah, I want to get rid of that. There we go. And then usually when you do Fibonacci retracements like this, the next areas that you do target are the 272 ratio and the 618 ratio. So even from here, if that were to play out, the upper target range is 200% and the first target rate is 147%. So a bit early to potentially say that this one is in the bag at all, but invalidation is, yeah, like I mentioned, new lows under here. So it's still quite a bit of distance for things to go down, 50% potentially, before this sort of setup is invalidated. But what I'll be looking for here is just on smaller time frames is accumulation. So again, we've had this dip event. I want to see that get bought up. And then as we move into this sort of middle range, again, we might see the same pattern form again, which is just a dip that buys up. And that's potentially somewhere that I might be interested in looking at accumulating some myself. So that's why I think BONK looks interesting. And again, the meme coin sort of a phenomenon hasn't slowed down yet. So, I mean, why would it until something big and big bang, sort of, what do you call it? Something over exuberant happens. So, you know, I would be looking at this one still with some keen interest if the overall market holds up. And lastly, I thought I'd look at something that's a little bit different, XAI. Layer 3 gaming. I think the Ethereum scalability narrative might at some point start to get some legs. So looking at something like this, it's at a pretty interesting point on a larger time frame, the larger time frame being its entire price history. It's done this same sort of thing that we talked about tonight quite extensively, where we're outside of a overall range. The last two higher lows for this trading range. And yeah, we're just at this point now where we're waiting for it to reclaim. So this one could be an interesting one to watch play out, because if it does claim that, the next level would be the mid-range, which is here, and then the top of the range, which is here. But again, it's all about market structure. Still potentially early days here, but if we zoom in where we are today, pretty simple levels here. There's these prior highs here. And then we have this high here before we break down. So again, if we're talking about accumulation, we're talking about the market willing and happy to put in new highs, pay higher prices. Something like this is a very rough drawing. This is the kind of thing that'd be great to see, where we're seeing dips, we're seeing higher prices after a dip. That would be a sign that this might be more likely to head back up to this area. And that would be the next decision point here, where we'd want to see the same thing happen again. And on a daily time frame too, yeah, not much else to say about this other than potentially working at level to level. So these are the most recent low closes, which looks like we're about to close inside on a daily range as well. And then we've got this low as well. So again, if we just start to slowly claim these level by level, the next targets might be the previous highs as well. So it's all about just sort of watching these things, start to put in that conviction that higher prices, the market is happy to pay for them. But look, that's it for me. I think there was quite a bit of ground covered there, potentially a little bit more in the weeds than maybe what some people are expecting. But I think, for me, the underlying conditions is everything. The market will do what the market does, and it really just depends on what the tone and the setting is at the moment. So again, we've seen in the past how things just sort of can just turn around like that. Everyone remembers potentially, a few years back when Russia invaded Ukraine, that just sort of caused a massive stir in the markets. They hate uncertainty. But for now, I haven't seen anything on my radar that is concerning. But that being said, there's some key macro data releases this week, next week as well. So there might be something that just happens that we're not sort of expecting. But look, I'll be sort of watching out for them and updating on my Twitter, as well as probably doing maybe more of an impromptu video if something pops up that I don't quite like the smell of, I guess, to put it pretty bluntly. But other than that, that's it from me. I hope that was somewhat helpful, and I hope we start to see some green leading into the end of this month. And, it might just mean a couple of days, maybe another 1 or 2 weeks of things going sideways, maybe not, who knows. But, for me, this all sort of seems like a pretty relatively normal price action leading into the start of the month, start of the quarter. Fundamentals haven't changed. If anything, they've gotten clearer and better, more dovish than what they ever have been. So we'll just wait and see what happens. Thanks, guys. I hope you enjoy the rest of your week. Catch you later.